welcome back. Today is another episode of the Daily Dose. Today is Thursday, December 29th. I took some time off for the holidays, for Christmas, but I'm back today. And I hope that everyone had a good Christmas as well. The market has just closed. The S&P 500 is up 1.75% today. So a lot has happened since we last talked. I believe the last day that I recorded was the 19th. So since then, we've seen some pretty big green days, some pretty big red days, everywhere in between, but we're about flat. We're pretty much right where we were, a little bit higher than when we closed on the 19th. But we've pretty much kind of just been going sideways. There's been a lot of news coming out. Japan continues to print money and buy back their own debt in their own form of QE, but there is a lot of interesting stuff happening around the world and in these markets right now. A lot of speculation on what will happen with interest rates, whether or not there'll be QE next year, whether or not that QE will be in the form of cutting rates or something else. And I do think it's going to be a really, really interesting year. We're also approaching Q4 earnings season, which will be interesting to see how far earnings are receding. And I think that that'll play a big role in not only what the Fed does, but what this market does too. And also, as we go into 2023, it's very important to remember that the stock market is not a reflection of the current status of the economy. Rather, it's a projection of the companies that make up our economy. And so those things can be a little bit uncorrelated sometimes. So it's just important to remember that even though the economy might be experiencing pain, the stock market has already priced that in and might be projecting better times for the companies that make up our market. So that's always important to keep in mind. And it's also why the economy can look very healthy and the stock market can start to turn over, because those two things are not always correlated. And the stock market is not a reflection of the economy. So let's get into it. Let's talk a little bit about the levels that we're at. We're still sitting above our zone here at about 3750. And I was thinking about moving it up because it looks like this level right here was getting more respected. And if you look at the dotted line right here at about 3780, we've seen some chop at that level before, but I decided that this level has been more consistent at the 3750, so I kept it. We also had a wick about touch it that was on the 21st of December, but we're still holding above this zone, which I find really, really interesting, because this was kind of like our quote-unquote bottom zone, even though we actually bottomed below, quite lower below. It was very quick. And if we do get back there, that could be a level of support around the 3,500, but I'm more looking to this for now. So we're staying above at the moment. Obviously, we came off the trend line. As far as my predictions for 2023 go, again, this is not financial advice. This is just what I'm looking at. I kind of want to make a little bit of a bold prediction, and I still want to say that we touch the 3250. So I think in 2023, probably in the first quarter, we will touch this 3250 zone. And I think that that's going to be the bottom. I think that the Fed will panic. I think that they'll cut rates and maybe, or excuse me, I think that they'll pause their rate hikes and maybe even start to cut rates prematurely. I think that that'll be a mistake, but I think that the market will capitulate to this zone. The Fed will panic, and then it'll recover. I think over the course of 2023 and 2024, the market will regain the losses that we had in 2022 because the Fed is going to panic. And I think that that's going to be more harmful for our economy and these markets in the long run, even though that the prices of the equities will recover in 2023 and 2024. So that's my bold prediction. I think we touched the 3250 in the first quarter. I think the Fed panics. I think they cut rates prematurely. I think we get a flash of deflation, and then maybe we get some stickier inflation that stays over 2%. Doesn't have to be the 8, 7% that we're seeing now, but maybe somewhere between 3 to 5% that they can't get to lower long term. And I think that that'll cause some more painful tightening in the future than what we're having right now. And I think the consequences of that inflation will also be uh, just more consequential to us. So that's my bold prediction for 2023 and beyond at the moment. Um, yeah, so I really still do like this 3250 level. I think we're going to touch it. I think it's going to be quick. I think that it'll be a panic. I think that's when even the Fed will panic. Um, and because they're going to see inflation starting to come down, and they're going to see this market crashing, and that's when I think that they're going to panic. I think that'll be their moment. I did map out this zone as a complete all hell breaks loose zone. I mapped this out uh, at least 6 months ago, more than that probably. And I have that at 27.35 to 26.70. I think that that could be our zone of extreme. Like this would be my absolute bottom. I don't really see us going lower than this. Um, but I do really want to see that 3250. And also I think that these levels are going to bring really great buying opportunities. I mean, unless you get some sort of like black swan event or something of the like, you might not see these prices on the indices ever again. And that's something not to be fearful of or get FOMO, but just something to take advantage of, something to be grateful for, even though the prices are falling. If you have a long time horizon, you can take advantage of that now and then get higher expected returns in the future. So even though the markets are heading down, you're actually raising your expected returns for the years to come. And that can be something that's quite advantageous for you if you have a long runway ahead of you. And it can be a really great tool if you are trying to build wealth. So uh, that would be my advice to you. Take advantage of the levels while they're here. Always be investing. Especially in these indexes because they will change over time and you might not get to see these prices on them again. Like, for instance, the bottom of this COVID crash, which was around, let's see if we can get it. It was around the 2200 level. We might not ever see 2200 on the S&P 500 ever again. Uh, or if you want to go back to 2008, so say you were alive in 2000, not alive, I hope that most of you were alive in 2008. I was definitely alive in 2008. I was not investing in 2008, but I was alive. And that was at around 675. So you're never going to see 675 again on the S&P 500. Um, and I bet people were really, really scared when the S&P 500 was at 675. I bet there were a lot of people saying it was going to go to 500, 200, whatever. And guess what? It didn't. And right now, even after a really big bear market, we're at 3,849. So you have to take advantage of these events when they come. It hurts when your portfolio is headed in the wrong direction, but it is something to take advantage of. Um, so that's what I'm looking at on the S&P 500. Let me know what you think of my prediction. Do you think that we won't reach this level of 3250? Do you think that we've already seen the bottom? Do you think that the Fed won't panic? Do you think that the Fed will be too tight? Do you think that we'll see something lower than the 3250? Do you think the Fed's going to over tighten the markets and something will break? Do you agree with me that in 2023 and 2024 we'll regain all of the losses and see new highs on the indices? And if that happens, do you agree with me or disagree that the Fed will make a mistake in panicking and easing too much again? So that those are my predictions. Let me know what you think. I'd love to hear what other people have to say. Um, I would always love to hear that. But it wouldn't be a daily dose episode if I didn't talk about Bitcoin. So let's take a look at Bitcoin right now. And you know what? I have to fix this. It brings all my levels down here for some reason, but that's not necessarily super important at the moment. So, okay, we've still been in this range since we broke out of our previous trading range back in November. We're right at 16,595, so right in the middle of that 16,000 range right now. And you know, if the market capitulates, I do think that the Bitcoin price will go lower, even though it's severely depressed right now. Um, I think there's just a lot of negative sentiment around the crypto market too. So if the market is crashing, if there's safe stocks crashing, safer assets crashing, I think that Bitcoin will probably go down more percentage wise. So, you know, I still think we could see it a 9,000 to 12,000 level on Bitcoin. That's kind of been my target since I started making these episodes. And we were a lot higher on the Bitcoin chart at that point. So that's kind of been my target. Um, I still stand by it. I think that we'll see those levels. I think it'll be an incredible investment opportunity, perhaps one of the best investment opportunities in my lifetime, probably, if my Bitcoin thesis does play out. I think that the levels you'll see on Bitcoin in 2023, as opposed to the levels that you'll see on Bitcoin in 2073, people will look back and it'll be one of the best performing assets of all time. And I do think that it would be foolish, for me at least personally, with my conviction, not to increase my stake at those levels. So I'm not selling here. I'm also not really buying here. I have been buying all the way down, but not really in any significant amount. Bitcoin makes up right now about 3.5% of my overall portfolio, um, and I would like to double my position if Bitcoin uh, goes to the $9,000 to $12,000 range, and that doesn't mean double the amount of dollars that I currently have invested right now. But if it goes down to that level, I'd like to double the amount of Bitcoin that I own. So I have a little stash that I've been saving for that to happen. If it doesn't hit, then I'll buy on the way up. I guess I'll buy as we go through the 20,000s, 25,000s, 30,000s, and I'll still see over 100% increase of my capital invested in that if we get back to the highs, which I think that we will 10, 100,000x from the highs in my lifetime. So, not too worried about my Bitcoin position. In fact, it's one of my investments that I worry about the least. Especially at these prices, I don't want to miss the bottom. Honestly, that's what I'm most worried about. I'm not worried about the asset itself. So, um, that's all really I had for today. Um, oh, and you know what? One more thing. I'll drop a price prediction for 2023 for Bitcoin as well, since I did for the S&P 500. So, what will happen to Bitcoin in 2023? Here is my prediction. I think that Bitcoin will drop when the stock market drops. If my prediction holds true and we see 3250 on the S&P 500, I think we'll see 9,000 on Bitcoin at least. I think when it bottoms, it's going to be extremely quick. It'll take a matter of seconds for Bitcoin to actually bottom. I think it will consolidate a little bit around the bottom, so maybe it hits 9,000, 8,000, snaps back up to 10, 11,000, trades in a range somewhere between 9,000 and 12,000 for however much time, and then I think it moves back up with the markets. I think it moves back up extremely aggressively. And if you look back at previous downturns in Bitcoin, so a previous winter like we're in right now, if you look at the bottom to the next kind of peak, it takes a long time. So we might not get back to the highs around 70,000 in 2023. I wouldn't be shocked if we did, but I would be a little surprised. I think by the end of 2023, we're sitting somewhere around here at the 45 to 50,000 level, and that would be my conservative price prediction for Bitcoin, or maybe it's aggressive. You let me know. But I think Bitcoin snaps below 10,000 quickly, trades in a range between 9 and 12,000, and then we finish the year between 45 and 50,000. And that's my prediction for Bitcoin. So let me know what you think of that. Let me know what you think of my S&P 500 and stock market predictions. Um, I'm really happy to be back. I'm glad that everyone joined us today. Yeah, follow us wherever you listen to podcasts. Subscribe on YouTube. Comment. Like the video, all that good stuff. Rate the podcast if that's how you are listening today. And until then, I'll see you tomorrow. Thank you.